Hey everyone, welcome back to another dividend investing video. I'm Nick, and this is the Dividend Growth Income channel. In today's video, we're diving into my $42,000 Dividend Growth Income Portfolio, breaking down how it performed and all the dividends we collected for the month of February. I'm also going to discuss what's next for both the portfolio and for the channel going forward. If you're looking for real-world insights into dividend growth investing, you're in the right place. Let's get into it. But before we dive into the portfolio, I want to quickly make you aware of an exciting event that I think will appeal to viewers of this channel, brought to you by our partners at Seeking Alpha, the Dividend Investing Forum. This is a live-streamed event happening on Wednesday, March 5th, 2025, from 12 p.m. to 3:30 p.m. Eastern Standard Time. There will be sessions from top analysts and industry experts covering topics like dividend yield, high-quality dividend stocks, REITs, bond ETFs, closed-end funds, and much more. And our friend Eli from Dividendology will even be presenting on the value of dividend growth investing. The event is exclusive to Seeking Alpha members, but if you use the link in my description, you can sign up for a 7-day free trial of Seeking Alpha Premium. That way, you will get access to this unique event and can decide if you want to keep your membership afterward. And if you do, that is a great way to help support the channel. I'll definitely be checking it out myself. Now, on to the dividend portfolio. I started this account in September of 2022, just over 2 years ago when I launched this channel. So you could follow along with me as I build up a dividend growth portfolio from scratch. My first deposit was just $100, but I kept investing regularly, week after week, month after month. Fast forward a couple years and the account is now sitting at nearly $42,500. Now let's kick things off by going over the dividend income I received in February for this account. Now if you've been following along, you know that the February, May, August, November cycle is typically my slowest period in terms of dividend payments, since most of our holdings pay out during the other months. In fact, this February, we only received dividends from 5 holdings, and here's how that panned out. On February 7th, I received $2.09 from MasterCard, ticker MA. Then just a week later, on February 14th, Agri Realty Corporation, ticker ADC, paid out $4.72. On February 18th, I collected $8.56 from Procter & Gamble, ticker PG. A day later, on the 19th, Main Street Capital, ticker MAIN, paid out $6.42. Then wrapping up the month on February 28th, Starbucks, ticker SBUX, paid me $9.08. So all these dividends were directly reinvested into the holdings that paid them out. Now, I won't lie, I don't enjoy these lower paying months of February, May, August, and November, but I'm not about to start focusing on stocks just to fix that. I don't believe the payment date should be a basis for investing in a company. Now that said, I really do appreciate the monthly payments we get from Agri Realty and Main Street Capital because of those extra compounding opportunities they provide. So altogether, my February dividends total up to $30.87, and this marks a 54.7% improvement over February 2024's dividends of $19.96. Now, we're here on my dashboard page, but before we dive deeper, I wanted to bring up something with you guys. It's really more of a question that I hope will give me some insight on how to create better content for you. When I first started making videos on this portfolio, they were doing really well, sparked a ton of interest for a couple years. But in 2024, I did have to take a break from creating content for a bit. And since returning, the interest in these portfolio videos just hasn't been anywhere close to what it used to be. Honestly, my channel as a whole is really on the decline. A couple of my first videos after coming back did pretty well, but right now YouTube just doesn't seem to be sharing my videos, even though my numbers for click-through rate and watch time are still pretty solid. But my impressions are dropping with each video. So I'm wondering if you guys could give me some feedback maybe, if there's something I could do to make these portfolio videos more interesting. Maybe I should make fewer of them. Maybe I should just update you on the portfolio every quarter or so, and then focus more on videos that evaluate different stocks and ETFs, finding value in the market at any given time. Those are typically the videos that seem to do best with you guys. Now, honestly, I saw this decline in my analytics happening in 2024, and that definitely played a part in my disengagement from content creation for a bit. But look, guys, I want to keep the channel alive. We do have some great members, and so if you could do nothing else, like, comment, subscribe for the algorithm. If you could click on that notification bell, you're going to get my videos whether YouTube thinks they're worth sharing or not. Thanks so much. And enough of my woes. Let's just get back to the portfolio. Right now, the portfolio is sitting at a market value of $42,469.15. And this is off $34,200 in cash contributions. So I'm up 24% in this 2-year and 4-month stretch. That's $8,269.15. Now, this is a dividend growth portfolio, emphasis on growth, so I'm not necessarily going after high dividend yield. Right now, the portfolio has a yield of 2.65%. It's pretty modest, with a yield on cost of 3.08%. But I'm pretty happy at this level. Chasing yield is not the strategy for me, especially in a young account like this with a relatively small amount of funds that's still building and compounding. So far in 2025, we've been paid $109.35 in dividend income, and over the next 12 months, we're projected to collect $1,127.16 in estimated annual income. You can break that down to $93.93 a month, or $21.58 per week, or $3.09 per day. So without doing anything going forward, this account is averaging $3 a day. And right now, we could simply reinvest all that money right back into the stocks that paid them, growing that snowball even faster. Then I have some forward income goals I've set here without putting like a time limit on these, as I'm not really chasing yield, but I do find incremental goals like this make it more fun and easier to just keep plugging away. We've already surpassed our initial goals of getting that first $1 a day in income. Then we're over $50 a month on average. Right now we're actually closing in on that next goal of $100 per month. So once we hit $1,200 in forward income, $1,200 divided by 12 is $100 per month. We'll crush that goal, and that should happen here in the next couple months, probably before summer hits. It'll be depending on what I buy, Now looking at the future, we're 61% of the way to getting $5 a day, 47% of the way to $200 a month, 19% away to $500 a month, 9.39% of the way to $1,000 a month. The ultimate goal for this account is to hit $2,000 of dividend income every month. And right now we're just shy of 5% of the way to that goal. While that's still a ways away, we've made real measurable progress and can clearly see the path there. We're well on our way, and I am so happy to be able to share this journey with you all. It's been one hell of a journey for sure. But how did we stack up in February? Well, I think we did pretty damn good. We started the month with an account balance of $41,149. We added $600 in cash contributions during the month, and if you want to see how that money was invested, I'll have a link to that at the end of this video. Now, the account grew by $720.15 due to the market gains and dividends received. That's a 1.72% gain. To put that into perspective, the S&P 500 was down 0.78% in February. So we beat the market once again, just like we did last month. 2025 is starting out strong for the account with a growth of almost 5% year to date, just over $2,000. As for forward income, it grew by about $30. This increase came from 3 factors: the $600 in purchases we made, the $30.87 in dividends that were reinvested, and dividend raises from 3 companies in the portfolio. On February 12th, Cisco Systems, ticker CSCO, raised its dividend by 2.5% to 41 cents per share. Then on February 14th, Next Era Energy, ticker NEE, sent me a Valentine's Day gift, a 10% raise to its dividend for its 30th consecutive year of dividend growth. Shares now pay 56.65 cents per share, which gave our dividend income a nice little boost. And last but not least, on February 25th, Home Depot, ticker HD, announced a 2.2% dividend raise, bringing the payout to $2.30 per share. While this was a bit underwhelming given Home Depot's prior track record, I understand that it's related to potentially a softer housing market right now. But that's exactly why I am a dividend growth investor. I don't just want to get paid by my stocks. I want to get paid more every single year. Think about it. Your boss has to give you a raise every year or so to keep you as a happy employee. And I see my dividend stocks the same way, except they work for me. Now let's see how next month shapes out. Here is my forward income. I do expect that we're going to hit a record in dividend income for March 2025, as we are expecting dividend payments from 18 different holdings which should get us close to $170 in dividends. That's a nice chunk of cash to reinvest. And we'll be receiving generous payouts from Chevron, from Next Year Energy, and our two dividend-focused ETFs, VYM and SCHD. And I'm actually really eager to see how that first SCHD payment for 2025 is going to stack up. And also that reconstitution is going to be happening as well. As for what I'll be watching for in March, I currently have 3 stocks out of this whole portfolio that are in the red. That's Mondelez International, ticker MDLZ, Lockheed Martin, ticker LMT, and United Health Group, ticker UNH. I think all 3 are looking pretty intriguing right now, although Mondelez was a better deal earlier in the year, in January and February, and it's come up quite a bit since then. In fact, I was about 12% in the red at the end of last month, where now I'm just about 2%. I've been adding to it, and it's now starting to recover. I'm also going to be keeping an eye on Next Year Energy, Chevron, and Vici Properties. I'll make a separate video going deeper into these stocks and more, but for now, let me know down in the comments what stocks have your eye for March. And if you want to see exactly what I did purchase in February, both in this dividend portfolio as well as my Roth IRA, which is tax advantaged, go ahead and click into this next video. And until next time, my friends, keep investing.